Hey, how you doing, guys? Teddy again with Keller Williams. Thanks for tuning back in for another weekly video. I wanted to talk about 1031 exchange today. So if you remember from last week, I was talking about advantages of investing in real estate. We spoke more about depreciation last year, how you can actually depreciate with a D your property to not pay taxes on your gains, slim to none. I want to talk about 1031 exchange today, which pretty much means you're just kicking the tax bill down the road. You're kicking the can. So before I go any further, don't forget, consult with your CPA. I cannot give you financial advice there. But what I can tell you is that this is what I am doing with my real estate investments. This is what I'm helping my clients do with their real estate investments. And this is all done legally. And it's written in the IRS tax code. 1031 exchange has been implemented, I think, 1921. So it's been around for a long time. Now let's dive into the numbers. Let's just say, for easy numbers, you're paying cash, $1 million investment property. As that asset grows, let's say in 5 years, that property is now worth $2 million. Your gain is $1 million difference. And that's from $1 million purchase price to $2 million in what the value is today after that asset grows. So what does a 1031 mean? The 1031 means that you can sell that property and buy a like-kind property that's going to produce you income. And instead of paying taxes on that $1 million gain of the sale of the property, you're going to defer those taxes as long as you follow the rules and regulations for the 1031 exchange. I'm not going to get into all the rules. That'll take me a little bit longer, but just to kind of be a little bit more shorter here in the video, I'm going to talk about the fact that you got to sell the property, get involved with a 1031 expert or a qualified intermediary, and then you're going to exchange the property. And what that will mean is you're buying a like-kind property, you're not paying taxes on your gains, and you're just deferring those bills. So rules are 45 days. Within 45 days of the sale of your property, you have to identify up to 3 properties. After that, you have 180 days after you close on the property after you close on your original property to close on your next property. So you are in a tipping time bomb here. So you want to make sure that you are aligned accordingly, you are prepared, because if you screw this up, unfortunately, you are going to be paying taxes on those gains. So let's just think about this. $1 million gain on this property. Again, you buy it for $1 million. It's now worth $2 million, and you want to sell and buy a like-kind property. You have $1 million gain. So let's just break the numbers down into how much you would pay if you didn't do a 1031 exchange. 20% capital gains tax. That varies based off your income level. That's $200,000 just in that 20% that you're going to have to pay Uncle Sam. 5% goes to state. Again, varies state by state. And 5% goes to Medicare. And that's a total of $288,000. So if you sell $1 million an asset that's grown $1 million, you're going to be paying taxes about $288,000. That's nearly 300 grand, almost 30%. Now, let's say you do a 1031 exchange. You buy the property, you watch it grow. You're like, all right, I'm really good. I'm good with this property. I want to build my portfolio. What do? You look for a like-kind property that's worth more. So you do a 1031 exchange, you sell, you have it situated with a QI, and you find the property within 180 days and close on that property, and you will pay a whopping $0 in taxes on the gain of $1 million. I don't understand how people don't do this. I've spoken with some investors that prefer to not do it. I don't understand why. It's in the IRS tax code. It's been around since 1921. You're saving nearly 300 grand. I mean, that's $300,000. That's a ton of money that you're just giving away for no reason. Of course, you're kicking the can down the road, and eventually you're going to have a recapture. But in my investments, I'm never selling and holding on to that cash. I'm selling and reinvesting that back into real estate. And the beauty of this, and again, consult with your CPA, you build this portfolio. Unfortunately, you die, and that property now goes to your kids tax-free. So real estate is generational wealth, and I'd love to talk more about that. So feel free to reach out to me, send me a comment or message on Facebook, and I would love to kind of dive deeper into this. And remember, We do have some multifamily projects that we're always looking for outside investors. So if you are curious about that to passively invest in one of our deals, send me a message. We'll hop on a call and see if it's the right fit for you. Thanks again for chiming in this week. 1031 exchange. Don't forget to consult your CPA. Don't put that on me. But $0 or pay a tax bill of nearly 300 grand. Your call. Thanks a lot, guys. Have a good one. Cheers.